Hello friends. When we solve problem of retirement of partner, we are required to consider adjustment of goodwill. When goodwill already appears in old balance sheet and revalued in adjustment, how to give effect, that will be understanding in this question. Let us read question. Pai, Amba and Manoj are partners in a firm sharing profits and losses in proportion to their capitals. Their balance sheet as on 31st March 2012 is as follows. Capital of Pai 30,000, Amba 30,000, Manoj 15,000. So their capital ratio is Pai 30,000, Amba 30,000, Manoj 15,000. So ratio will be 2:1. This is capital ratio and same will be their profit sharing ratio. Creditors, outstanding expenses, profit and loss account. This is accumulated profit. Asset, cash, stock, debtors, plant, building, motor van and goodwill. Here goodwill already appears in old balance sheet, that is 18,000. On the above date, Pai retired. Partner Pai is retired, he is having share 2/5 and the following adjustments have been agreed upon. Goodwill revalued at 15,000. Here it is 18,000, revalued at 15,000. So one way is to reduce goodwill in balance sheet by amount rupees 3,000. Second effect will have in profit and loss adjustment account debit side. Assets and liabilities were revalued as under. Debtors 17,000. Debtor is 20,000 over here. New value is 17,000. So we have to reduce it by 3,000. Second effect, profit and loss adjustment account debit. Stock at 90% of book value. Stock here we have 12,000. 90% of book value means it is reduced by 10%. That is less by 1,200. Second effect, profit and loss adjustment account debit. Building 35,000. Building here is 20,000. So we'll have to increase it by 15,000. Second effect, profit and loss adjustment account credit. Plant 11,500. Plant here is 13,000. So we'll have to reduce it by 1,500. Second effect, profit and loss adjustment account debit. Motor van 29,500. Here we have motor van 31,000. New value is 29,500. So we'll have to reduce it by 1,500. Second effect, profit and loss adjustment account debit. Outstanding expenses 18,000. Here outstanding expenses are given 15,000. So we'll have to increase it by 3,000. Second effect, profit and loss adjustment account debit. Amba and Manoj contributed additional capital 20,000 and 10,000 respectively. This will be credited to their capitals and we can add this amount to cash balance. Balance due to Pai is transferred to his loan account after paying him 1,000. Means amount due is partly paid in cash and balance is transferred to loan account. This 1,000 paid in cash will have to deduct from cash account and second effect will be Pai's capital account debit. Prepare profit and loss adjustment account, partner's capital account and balance sheet of new firm. Let us start with the postings. Pai, Amba, Manoj are partners in a firm sharing profits and losses proportion to their capitals. We have calculated that proportion 2:1. This is capital ratio and same will be their profit sharing ratio. Their balance sheet as on 31st March 2012 is as follows. We'll start with liabilities. We have capital of Pai, Amba, Manoj. This will be recorded to the credit of partner's capital account. Partner's capital account credit by balance brought down Pai 30,000, Amba 30,000, Manoj 15,000. Relating to partner's capital, we have item profit and loss account 20,000. This will be divided among all partners in their profit sharing ratio. Partners capital account credit by profit and loss account ratio 2:2:1 by 8,000, Amba 8,000, Manoj 4,000. On liability side, we have outstanding expenses 15,000. There is an adjustment on this. This will be recorded in new balance sheet in inner column. Balance sheet liability side, outstanding expenses in inner column 15,000. Liability side, we have creditors 7,000. There is no adjustment on creditors. It will be recorded in new balance sheet on liability side on outer column. New balance sheet liability side, creditors 7,000. Let us go through assets. We have cash 3,000. There is adjustment on cash. We can record cash, new balance sheet asset side in inner column. There are 3 adjustments on cash. Accordingly, we have left space over here. Stock 12,000. There is an adjustment on stock, new balance sheet asset side. New balance sheet asset side, stock 12,000. Assets, debtors 20,000. New balance sheet asset side, inner column 20,000. New balance sheet asset side, debtors inner column 20,000. Plant 13,000. New balance sheet asset side, inner column. New balance sheet asset side, plant inner column 13,000. Building, there is an adjustment. New balance sheet asset side, inner column 20,000. Asset side, building inner column 20,000. Motor van 31,000. New balance sheet asset side. New balance sheet asset side, motor van inner column 31,000. Goodwill 18,000. There is adjustment on goodwill. New balance sheet asset side. Goodwill 18,000. On the above date, Pai retired and the following adjustments have been agreed upon. Goodwill revalued at 15,000. Here on asset side it is 18,000. So we have to reduce it by 3,000. Second effect, profit and loss adjustment account debit. Profit and loss adjustment account debit to goodwill 3,000. Balance sheet asset side, goodwill 18,000 less decrease by 3,000, outer column 15,000. This is revalued goodwill. Assets and liabilities revalued, debtors 17,000. Your debtors we have 20,000. To reduce it by 3,000. One effect, profit and loss adjustment account debit. Profit and loss adjustment account debit to debtors 3,000. Balance sheet asset side, from debtors we are required to reduce 3,000. Outer column 17,000. Stock 90% of book value. Stock here is 12,000. We have to reduce it by 10%, that is 1200. One effect, profit and loss adjustment account debit. Profit and loss adjustment account debit to stock 1200. Balance sheet asset side, stock 12,000 less decrease 1200. 10,800. This is 90% of original stock of 12,000. Building 35,000. Here it is 20,000. There is appreciation 15,000. Should be credited to profit and loss adjustment account. Profit and loss adjustment account credit by building 15,000. Balance sheet asset side, add to building, add increase 15,000. So it is 35,000. Plant 11,500. Plant here is 13,000. So it is reduced by 1,500. Profit and loss adjustment account debit to plant 1,500. Asset side, plant 13,000 less decrease 1,500. Outer column 11,500. Motor van 29,500. Originally it is 31,000. So it is reduced by 1,500. Profit and loss adjustment account debit to motor van 1,500. Balance sheet asset side, motor van 31,000 less decrease 1,500, 29,500. Outstanding expenses 18,000. Your outstanding expenses we have 15,000. It is increased by 3,000. Profit and loss adjustment account debit to outstanding expenses 3,000. Balance sheet liability side, outstanding expenses 15,000, add increase 3,000. Now it is 18,000. We have completed all adjustments relating to revaluation. We can close revaluation account or profit and loss adjustment account. Profit and loss adjustment account is closed. We get profit of 1,800, which is distributed among partners in their profit sharing ratio 2:2:1. Pai 720, Amba 720, Manoj 360. This will be credited to their capital accounts. Partners capital account credit by profit and loss adjustment account. Pai 720, Amba 720, Manoj 360. Amba and Manoj contributed additional capital 20,000 and 10,000 respectively. This will be credited to their capital accounts and it will be added to cash balance in balance sheet. Capital account credit by cash by 20,000, Amba 10,000. This will have another effect in balance sheet on asset side. Cash opening balance 3,000, add amount received from Amba 20,000. So it becomes 23,000. To this we'll add amount received from Manoj. Plus 10,000. So it has become 33,000. Balance due to Pai is transferred to his loan account after paying him rupees 1,000. Asset side, from cash we'll have to deduct 1,000. Paid Pai 1,000. So it will be 32,000 closing balance of cash. Partners capital account debit, amount paid to Pai, cash 1,000. Now we can close partners capital account. We have closed partners capital account. In case of Pai, we are getting balance amount payable 37,720. This is transferred to Pai's loan account. In case of Amba and Manoj, we are getting balance 58,720, 29,360. These are closing capitals which will be transferred to liability side of new balance sheet. Capital of Amba 58,720. Capital of Manoj 29,360. Pai's loan account 37,720. We can close now balance sheet. Balance sheet asset side total is 1,50,800, which is matching with liability side total 1,50,800. That means balance sheet is tally. In this question, we learn how to give effect to adjustment of goodwill when goodwill already appears in new balance sheet. Thanks for watching this video. Stay tuned with Ekeeda and subscribe to our channel Ekeeda. Thank you.